Hi everyone, welcome back to Corporate Decoder. Ever wonder what happens when a company that owns a bunch of chain restaurant properties makes a big presentation? Will the value meal survive? Let's dive into Four Corners Property Trust's recent filing and see what's cooking. This report is basically a snapshot of what Four Corners Property Trust, a real estate company that focuses on owning properties leased to restaurants and retail stores, is telling investors. It's like a sneak peek into their strategy. The date of the report is March 17, 2025. The main point of this filing is to share the presentation that the company's leaders will be giving to investors. This presentation gives an overview of the company, its plans, and its performance. Think of it like a company briefing to get everyone on the same page. Now let's jump into what was in the presentation. The presentation is an overview that management is sharing with investors. That's the gist of it. It's a way for the company to keep everyone informed about where they are and where they're headed. So what's the overall picture here? Four Corners Property Trust is laying out its story for investors, highlighting its strengths. Looking at the provided document, it's hard to give a decisive recommendation. The filing mainly points to an investor presentation. However, here are some general points to consider about real estate investment trusts like Four Corners. Strengths could include a steady stream of income from rents. If they have good properties and strong tenants, that's a plus. Diversification across different restaurant brands and locations would also reduce risk. A strong balance sheet with manageable debt is always a good sign. Weaknesses could be things like high interest rates, which make it more expensive to borrow money and buy new properties. Also, if restaurants start struggling, they might not be able to pay their rent. Changes in consumer tastes could also hurt the restaurants they lease to. Some notable risks for Four Corners could include a recession, which could hurt the restaurant industry. Rising interest rates could also make it harder for them to grow. Opportunities might include acquiring more properties, expanding into new types of retail, or finding ways to increase rents. In conclusion, based on this filing alone, it's tough to give a thumbs up or down. You would need to see that investor presentation and dig into their financials to get a true feel for where they stand. Thanks for watching. If you found this breakdown helpful, please like, comment and subscribe for more Corporate Decoder deep dives.